closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. Than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on into the live. This is not a crystal, it's man-made. It's called a dichroic cube for you science people out there. What it does is it splits the light into its various frequencies. It's quite fascinating to check out. You could see the splitter perhaps where it splits the frequencies. They use these in projectors to get the white light into its various colors. They're quite fascinating to look at. Needless to say, moving on. All right. Well, thank you for coming on in. Let's get to it. Time is of the essence and of the mind. So let's take it one step at a time. So what we did was we put out the idea last night that it would come down, hit possibly the bounce off the 1.618 of this trend-based fib extension tool. How do you get the trend-based fib extension tool? Once again, let's do it all from scratch. It's similar to these pitch fans, by the way. It's an impulse retrace idea. So you take two clicks essentially, and the first one is the impulse and then the retrace. And then all of that math is contained within those 2 clicks. The settings here, if you want to set it up, I'll go ahead and just start off with some value right off the bat. If it'll actually load, here we go. These are my settings. 236 would be your point of entry for a long or short, and then you'd look for the 786 resistance. The 1 and the 1382 are your profit regions. A long-term continuation idea would be the 1618 or the 2, and then some possible larger resistance slash support from this 0.65706 region. So let's go ahead and add this on there. So similar to where you would click up here from the top and the drop down here, and the retrace contained that M formation, which also gave us the trend-based idea of a reversal to the downside. And you would look for that 236 entry, which was here. You write it down to the 0.65706 region, where it struggled for some time to get the permission for the trap door to be open at the 706, which it was, and boom, it dropped down to the 1382 region here. And so you could have just set a take profit from the 236 all the way down to the 1382, or 1 if you're frugal, and then you just monitor the health off this 65706 rejection area. And so we went down to the 1382, we meandered back up, found our bounce and support at the 1, broke back down, came back up to the 65706 region. They said no, we don't have enough to justify the short squeeze, and they broke back down again into the 1618 region to knock out that liquidity. And that's where we saw the support bounce here. Even though there was no real structure here to bounce off of, you can use fibs as structure. So fibs are a very interesting tool, to say the least. And these diagonal fibs, and these diagonal fibs are basically the same dealio in terms of projecting these ascending channels that they break down at. So these are fascinating as well. They show you where you could essentially set up a rejection on the diagonal fib region to take down into another region. And this was the same impulse retrace idea down here, and it projected into the future these channels, which would put us, if we continue to the downside, at 2 down here at 21.4 on this chart, but the math would be different on a different exchange. And so yeah, that's where we stand on those trend-based fib extension tools. So we're going to go to a lower time frame to see where we bounced yesterday. We put out the idea of the hourly reset, and then that would take us possibly up after that point. And sure enough, we had the hourly reset come down to a certain region valued at 20, which would be reset. We also put out the image of it printing a 5 on the Momentum Master indicator. So it put out this 5 diamond with the X for the higher time frame exhaustion, and we said we could see a bounce here off of that fib. And sure enough, we saw a bounce off that fib, and it got rejected at the trend-based fib extension level of 1.382, which would also be the wick that it wicked off of before as well. So you could have locked that in. You got the 2 time frames exhausted. You could at least move your stop loss into profit. You would have gotten knocked out. And now what are we seeing here? Well, we're seeing that we're getting exhausted on 2 time frames again, and this diagonal fib level is, we've broken above it. We're kind of if we hold this region, we could make another tap to this 1382 and potentially go higher just looking at fibs alone. So the fibs to me are kind of like a entry plan zone, a confluence region that you put in perspective with probabilities of the stochastic resets and the exhaustion on those time frames. So you wouldn't just enter here randomly. If the stochastic got exhausted, you'd wait for it to have some confluence of some kind on one of these fib levels. So that's why we do this first, to try to just see where we would meet with some resistance, as we did here at the 1382. Why did we reject there, for example? It's not a coincidence that that coincides with that level. And also, if you stack that, like for example, if I take just the regular retracement and I go from wick to wick from the impulse to the top, that happens to be the 706 of that larger external liquidity region, 706. So we got rejected off the 706, which also is the 1382 of the bearish trend-based fib extension level. And yeah, confluence on confluence equals take your profits, get out. And that's why we remove that right now and move into the liquidity. And we also saw that yesterday we posted that, or as it got popped this morning at my time, we saw this guy, this 176 million bubble that got popped. So when they release a large amount of liquidity, it either absorbs it or goes immediately back to absorb the other side upon the release and the sell-off of that buy-side liquidity. They buy it back, the exchange buys it back and sells off their impulse that they went up to grab it with, and then they just went and grabbed all this stuff and then bought it back and absorbed it pretty well. Okay, so let's look at the imbalance. We have 8 billion in shorts, negative imbalance to shorts, and we see this area getting stacked quite nicely. So this 176 million up here is still in the trade as well, and they're currently at a loss from where they opened, and it's getting really caked nice and thick at that 23k region. So 23.18 at the top of this thick band here could be the target next in our move to this higher time frame recovery of the fair value gap that we went over the last few days, which coincides with this fib level of the 618 rejection that we talked about. So let's go into a non-diagonal fib chart to just keep it cleaner for the eyes, for the people that don't know about that just yet. So let's keep it clean. So that's why we have this bubble solidly locked and loaded for that idea. And also you could have looked for, we put this idea out just even on smaller time frames, because once again everything is fractal in nature, including yourself. We're all reflections of each other. So that's why you should be kind to one another and not greedy and not selfish. So yeah, you go to the 6, we got a bounce at the 6.5 level. Initially it sold off and got to the 6.5 level. We're seeing a bounce here. So these confluence on confluence, we get a rejection at the 618 and kind of found that as support within this local hourly time frame. And then you'll eventually, if you go up to here, you'll see that rejection on the 618 up here as well. Sorry, let me be more precise with that. Yeah, and so eventually if you get that pool and that pool coincides with here, what do you know? So the fibs and the liquidity pools go hand in hand, because what it's doing with this drop and the percent of the drop and the area that they get the interest enticed with their inducement, that happens to mathematically create a liquidation point in the region that also happens to be a fib. So it's all connected in this weird miasmic yet concrete way. So, you know, seeing these bouncing zones at the 618 golden pocket region of this is a way to find another entry that's clear. All right, so we're currently at that point in time, and this also coincides with the cloud of Momentum Master, which we were talking about as well on Momentum Master A. We saw the cloud get thin here, and we were talking about a thin cloud, which also coincided with this Fibonacci region, so you got to bounce off the cloud. And we always said, when you pierce through the cloud, what do? You come back and kiss the cloud. And so that's kind of in conjunction with that idea. So you just find these things as kind of support structures in your own mind to look for entries that make sense, you know. And if you're seeing that thinning cloud that's starting to get thick and it's in this region, it's kind of a, you know, a way to enter smooth without having a drawdown from that point. So it's just a roadmap, a guide of sorts to help you on that journey. So let's go quickly into the other time frames. I think we've already done enough of where the higher time frames lie, but we're just going to go quickly into the heat map of the yearly and the 1 month and the 3 month, and we're going to, maybe we'll look at the 7 day, but we're not going to go into the levels so much today. It is the weekend. I want you to spend time with your friends and family. I went to Toys R Us with my family today. We were looking at some Lego stuff. Recently they're really into Legos, and it activates me to get into Legos as well. Like here's a few dorky ones. This is Dr. Jekyll and Mr. Hyde, because there's, you know, archetypes within us all. And then here's the genie, one of the genies anyway. All right, so that finally loaded. So let's go to the 7 day. Once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. So we have the about, what is it? On the 7 day, it's getting thick up here in that 24K region, although that's not realistic right away. We'd be looking right here. They got 4 billion released at 22.7. Originally starting at under a billion their inducement, but now it's quite thick at 22.7. And then the 23K region, what we were talking about before, that's pretty thick, and we saw where all those bubbles lie on the 1 minute. So these bubbles are where they open the trades, and then it stacks into this heat map, which shows you in billions on high block capital. So clearly you see that it could go up to this region just based off of where price action is. It makes more sense to go here than here because there's more money for them to take. Them being the exchange, the market makers, whatever you want to call them, the people who want to profit the most and stand to have the ability to move the market. All right, let's go. Move fast. Trying to get a rhythm here. So on the 1 month, we were noticing how the caked liquidity is going, getting thick down here, although also building a large amount beyond 24K that's also getting caked too. So here it looks pretty even Steven in terms of which direction it could go in a out of the range idea. If it breaks beyond the range, which is the target out of this small liquidity range here? Is it going to go up to go down, or go up and continue up? That is it's hard to say on this time frame, but interesting nonetheless that they're caking that 25K region. We've been saying for the longest time that 25K will be attacked once again. It's just a matter of when. So on the 3 month time frame, you have, you know, double-digit billions. It's clearly imbalanced to this region below sub 22K for how much liquidity is getting stacked down here compared to up here. Now, if you were just to go off this image alone, we'd be like, well, then we just short it straight down to 18K. That makes sense. But it doesn't work that easily. You have to take these time frames and juxtapose them and step back and see where older pools lie. So we need to go to the 6 and yearly to see that. And then you'll see why we haven't dropped like a rock just yet. Doesn't really express it so clearly here, but you'll notice that the values changed. There's 100 billion equals yellow color, so those 100 billion that got taken at 22.3 back here in January, they haven't yet made that on the 6-month time frame yet. But if you go to the yearly, you'll see a different picture entirely, because they have pools that go all the way back to June and May of last year. So these pools have created a nice little band of liquidity up here at 25.6, which is why I'm pretty confident to say they'll go get this at some point in the near future. And that's 178, I don't know if you could see if my head's in the way, but $178 billion at 25.6, 100 billion at 26, 72 billion at 26.4, 123, 26.8, 73 billion, 27.2, 27.6, 121 billion, and so on and so forth. And you get below 74 and below up here. And this was previously like 47 billion at 26.4, and they thickened it up a bit, so that became, you know, an inducement point from 47 to 72. So they've increased 30 billion up in that one region alone. So you see that these gaps in liquidity that were not present before are now kind of filling up with liquidity. So it's getting the idea that this region is possibly becoming a target on the yearly time frame. So you could compare all of these to these, and then that's where you see the idea of the upside still being a possibility, because you have these older pools at play. And sure enough, they did that here when they thought we were going to 19, when we were going to the upside, when everyone thought 19K was the bottom. And then they increased these pools significantly over that long consolidation time from June, and they just went and dipped in and grabbed it real quick, and then they reversed back up. So are they building these pools up here to dip in and then reverse back down? I have no idea, but it looks to be the case that they're caking up that 25.6 region to attack in the future. So the 3-month has been my area to look at, because it's more narrow with the scope and the colors. So, you know, you can't really see, even though there's like 6 billion here. So that's why in the immediate term, just going up to this region at 23K seems to make the most sense, because it's a recovery of this vector candle and this liquidity pool. And whether they have the gall and the liquidity trap to go beyond that point, we'll cross that bridge when we get there. But in the short term, it looks like they might go up to this region at the very least, which is why we hold true to that idea and haven't moved this circle at all, other than to just adjust it where we think it might go up in that point. So that would be like, what, Monday 6 p.m.? No, I don't think it would be that. Maybe about 11 in the morning, or yeah, around the candle close, somewhere there. So you could see another rejection, inducement, and go back up. So now we can turn on our indicators and see what else we can glean, and then we'll bid you adieu and maybe take any requests that you may have. We want to make it a short but sweet stream once again, because it is the weekend. Let's make sure you spend some time out and about and enjoying yourselves. How's everyone doing out there? Let's say what's up in the chat. Yeah, they have good STEM toys. We got a marble run thing recently where, you know, they build, you know, these things for the marbles to go down and whatnot. Oh, thanks. Yeah, I used to be a DJ back in the day. I got a bunch of, you know, I got like, it's well over like I got a record thing, so I got a bunch of records. Like, I used to be into trance and progressive house and break beats, so I got a bunch of records from back in the day. Each one was like expensive. Now everything's digital, but yeah, so the baseline is above the price here. You're getting some absorption of sell-offs here based on this large arrow. What is the arrow? Well, I factored all the time frames volume. It's cumulative volume time frame delta, so it's looking over all the different time frames volume disparity and adding it up into an arrow. And if it's facing down, it's a large sell-off, and if it's a large arrow to the upside, then it's a buying zone. And if you get these absorption here, we were talking about it's absorbing these sell-offs and maintaining the price. And if you're seeing this buying volume entering in, even though it's red, you know, it kind of gives the idea that there's a lot of volume entering here. So you don't need to really look at the volume. You can see the volume expressed in an arrow here. It may be, of course, everything looks busy when you don't understand what those mean, but once you understand the context, it kind of makes sense, right? And all of these things are toggleable too. So the suite contains so many things, you can't have them all on at once. You can say consider money flow, consider suppression, and I could turn these off. So we'll turn these off just for now, and it should turn off soon. There we go. All right, so yeah, we got the baseline, the fat boy, we call him the fat boy baseline above the top. It's less sensitive, he lags behind slightly, but these are leading indicators. They are the only leading indicator formula I have found which actually is preemptive in predicting where things will go up and go down or stall out. So we had the crossover event of these on the hourly time frame, which is causing the stall out to occur. But then if you go to a lower time frame, you'll see that it probably crossed over. It crossed up rather here, and then you started to see this play out and the expression there. So that hourly one played out in its own sense just looking at the Momentum Master A. And if you look at the ATR here, until we can get above this ATR, you know, this is why people probably use this to take profits on a conservative route, because until we can break above it, it's not switching the trend on this just yet. And yeah, so the 15-minute is overbought, as is so you have this 2 circle. You would get an alert to your phone and it would tell you you're overbought on 2 time frames. Those happen to be the 15, and at that moment it was the 5. Looks like the 4 hour is overbought too. So yeah, your 4 hour is kind of getting overbought, which is not so hot for where we've gone. We've basically just been trading between these 2 fib levels. So the 4 hour time frame, we got the crossover event on the 4 hour. We pointed that out, like the crossover here starts to play out unto itself if it closes in that position and locks it in. So the 4 hour, you still have this momentum up here. You got all the way to overbought status, but the Williams here is just getting a rising sun. So the Williams, this is where you're seeing that the Williams and its golden light of the rising sun that it can provide could pin the 4 hour or keep it up here. Why would it do that? Well, this is when you go extend yourself to the 6 and the 8 and the 12 hour time frames, because they still have room to go. You see what I mean? And the Williams has yet to go. And you go to the 8 hour and the Williams still has room to go. Still in the green, hasn't even gotten the golden sun cross just yet. So even though the 4 hour is overbought, that doesn't mean anything necessarily, because the 12 hour, the 8 hour, the 6 hour, these things still have some weight behind them that could play out here to the upside, to that 618 just above us, and the 22 as well, my treasured 22. And go to the 30-minute. Getting overbought here, but also getting a crossover event off of the cloud. And you're getting a thinning cloud on the 15, baselines beneath the price. So the 15-minute, you had that double top. And so what are these double tops occurring? I'm sure you've wondered, like, why does it double top in certain areas and not double top at others? And a lot of these times it has to do with these weighted moving average clouds, like I knew a friend who is really into Ichimoku, which is like one cloud if in Japanese, but Ichimoku's strategy uses clouds and these crossover events, and it inspired me to get into clouds a lot. And so all of these components have a story and a back-tested idea behind them, and they're not quite anything that you've seen anywhere else, so I would say that they're quite original. But it breaks through the cloud and then it comes back and retests it, and then that's kind of like a good entry point if it holds the cloud and the cloud has thinned in a manner of speaking, and it happens to coincide with these levels. So 15 minute is high. There's no real entry at this time. Your entry would have been off of the 706 that I put out earlier in the Rayman Discord. I'd love to have a permanent link for invite to his Discord, but it changes and expires, so it would be nice to have something permanent for that. But yeah, he has a free Discord. You can shout out if you want to get in there. But yeah, you would see these bounces off the cloud at the coincided fib level would be your real entry. But right now there is no real entry level per se. We're just observing where it goes in the meantime and where to possibly stall out. So it would if it taps up to this region and doesn't break through it, you'd see your basically like a fade out back down to the downside, but maybe some cat ear situation. And we have like, you can always say we have like a possibility for an event, like a extreme liquidation event, like you can have a cat ears and then just break down completely. You never know. There's nothing set in stone that it will go up here, but that's why we do our own due diligence to look at all of the liquidity first, because this is just not as thick as this. And this guy who opened that 176 billion is just still underwater slightly, and so they flirted with this guy, this one before, the 50x leverage guy, and they gave him a little bit of profit and then came and got him. And so this guy is still, this one guy, 25x guys, they gave him a little profit, he didn't take it, and then they put him underwater and they're seeing if he's holding. Is he a diamond hands Sato type guy who's riding it to the end or not? Chances are he is, if he's had it open this long since March 3rd for 2 days on a weekend. So he becomes the visible target for the sharks to eat. So you want to get in and get out on the weekends, low liquidity. So you don't want to be this guy who just he's broadcasting his account to be taken. But what do I know? I'm not a financial advisor. Nothing I say or do could be construed as financial advice, entertainment purposes only. But looking at the exhaustion here on 2 time frames, you didn't break above the ATR, so you could come back down and retest this again. So you'd be looking for some sort of thing like that. And even on these smaller time frames, you can use trend-based fib extension tools. You can say the impulse to the downside and the retrace back up and to wherever that is, and that will give you some regions into the future as well. And so those can coincide with pools too. So you can kind of look at like different 1382, like where we've been bouncing off at the 1618 here. And so everything again is fractal in nature, so you can use these rather than poles to kind of like see potential exhaustion points or bounce levels and where they coincide with fair value gaps and liquidity pools and whatnot. So that's kind of cool. I mean, technically the downside was here, but so yeah, I mean, basically you want to see the 15-minute and the 5-minute reset in such a manner. The 4 hour is definitely not on your side though, so if you just go strictly off the 4 hour, we haven't really gone anywhere. We've just stayed flat and then gotten overbought, which could be construed as a struggle. So you could just go up to go down harder and then basically, create a lower M formation. So you could kind of come down into one of these regions before you go up to there too. And so that brings us back to this guy. So you got 21, 7 billion, the 22 even, 7, only a billion at 22.1. 22 even has nearly 7.5 billion, and yeah, you got more down here. It's really caked in the 21 region. So if you were going to go down, you would break out of this region completely, or go to 22 even and stop out that 7 billion before you go on from there. So let's look at the liquidation levels really quick on the 15-minute and below. You know, this is just spitballing here. I'm not going to keep this up. So you got some 100x that opened up here, and you can juxtapose them to the number of 100x shorts that opened here. So they're clearly going for these guys at this exact moment in time to knock out this bubble. You can't see what the amount is, but once there's a 5.3 million, this is what they went for, why it surged. So the irony is the shorts end up fueling the upside momentum, and the longs end up becoming the drag that drags the price down. So the more longs that open, the more drag, like too many people getting on an elevator and it just can't take off, and it comes down and gets them. And then the shorts, they end up pulling the price up to them. So this 6.4 million 100x that's opening here ironically becomes the target. So this thing, it says 6.4 million at 100x. This becomes the gravitational point to grab, because there's no trade of long opening here that's equivalent to that. It's shifting in value because those people are flopping and groping and closing their short out at a loss, but it's eating their price to fund their way up to this region. And then now you see a 700k trade of 100x opening up here, and this is cumulative, so of course that's maybe not one guy necessarily, that's just at that exact moment in time, and that's why it's pooling up, because there's more people opening in this candle at that amount. So it's that much amount. So now that amount disappeared, so that's now gone in that large 6 million idea, and it's increasing more down here. So this is what you do. You just kind of like watch these things and see where, if you were in from here, for example, and you got that alert on your phone and it coincided nicely with what you wanted, you would just follow the crossover events and see the kisses at the cloud, and now you're seeing a large amount of 100x down here. So if they go up and bounce off this adaptive average here, like if they go up to here and clear this zone, then this could become the target again before it goes up. It's the weekend, so expect range-like behavior until the end of the candle close for the week. So they could just go knock out these guys and then come take out these guys. And then if that coincides with something you like down here, then you could basically like take a chance down in this region. But you want to remember, buy at a discount and sell at a premium. So right now is a premium time on the local range, so this is not where you would want to get in necessarily. So you'd just be observing price and watching where it reaches these regions of resistance after liquidity grabbing these guys. All right, let's look at what you guys want to look at. We can go to something like Swing-B from yesterday and see where that took us, and then we can see what other people want to see. So let's first go to Swing-B and then come back to this, and then we'll go to something you guys want to see. So it looks like they went slightly down and printed another rocket from that zone, if I'm not mistaken, like we did it about there yesterday, right at that point, and then it kind of went up and went down, and then it went up again. So it triggered like a liquidity grab, and then it shifted up So if you had just stayed in that was like 8% from that point. But yeah, that was, it first had some drawdown of 7%. So you basically floundered around the entry. But for these two rockets to appear on a 4-hour time frame, the last time we saw that on Swing B was down here. All right, so it did meander. Oh, it did meander around. You know, it went up like 18% there, and then it ranged for a while. But then eventually, it started to see some larger time frame stuff occur, where you had 80% gain, 60, 70, 80% gains, and it got above this adaptive moving average. So the adaptive is currently beneath us. So we do have that on our side for Swing B. Getting resistance on the 706 region, which is not necessarily the best. So we were talking about how it would break out and then fatigue off of one of these regions and then reset some of the time frames. So if you can't get above the trend line here, then it could break down and create like inverted headed shoulders of some type, like before it breaks out. Like it could meander around the idea or fall back down in before it comes out, you know. So this the 4 hour, the 1 hour, the 15, the 5 is all overbought here. So you could just reassess the situation and see if it gives you a better entry down below. You do have the rockets though, so you could just let it percolate and see where it takes you. But you know, there's always a better entry is my motto, and so protecting your entry at all costs is more important to me. Oh, and also I just forgot, I overlooked the rejection of the weighted moving average. So the weighted moving average is above us, and you're getting that bearish retest rejection possibility playing out. So that's not good. You want to see it bounce off of it, not reject off of it. So yeah, as we stand right now, I would reassess and look for another entry possibility down at the bottom of the pattern, and that's Swing B. All right, let's see what's on the menu you guys are looking at. Anyone have anything they'd like to share and have a look at together? Nothing? No. I know Ajax has been hot. Let's take a look while I wait for you guys to say something. Let's see. You want to see where I put out Ajax for Crypto Lifers Group back in the day? This was a trade I put out in October that banged to the upside off of a rocket, and you had rockets the entire way for giving you those ideas too. That was fun. That was fun indeed. But it's all in the past, Indiana. It's all in the past. Goodbye. Let it go, Indiana. Let it go. All right, so this is definitely at a premium level to me by the looks of it. Looks like you're double topping, you know. People would be seeing cup and handles perhaps, but not me. Turn this off first and just get squared away from the range. Come on, brother. Why are you so slow? Come on, brother. So the last time we were up in this region was back in 2021, and we wicked off that point So if you didn't take profits there, that would be greedy as all get out if you went all the way up to there and just said, no, it's gonna keep going. But it happens. I've been there where I saw like 1,000% and just like I was so befuddled I didn't know what to do. But you do have that rounded kind of structure here. I mean, it's doing a real good job of appearing as support. And the daily is coming down on you. And you have the weekly. Let's turn on A. Let's see what A looks like with this. So you had that bounce off the cloud. The cloud is pretty thick. So and you're still got the baselines above price, and you got the crossover event happening here. So not exactly thrilled about the position of these on the daily necessarily. And I don't know, does it have enough data for the weekly? Let's see. The weekly is like way out of the channels, just like screaming to come back to the bottom of this channel, or like down to here. And this is where it gets wonky with like altcoins, because their data is not rich enough and robust enough to like give you like a clear picture of how to trade this idea here on the 1 week with this indicator. So let's just go to the daily and below for this and try to get some semblance of interest or whatever. And so the 4 hour getting kind of over, it did the recovery of the vector 50%, I believe. You had the 618 wick, 0.65 wick with the 0.5 equilibrium rejection kind of thing idea. And that's just a recovery of the vector situation. And we should be doing it this way, right? 0.706, 0.65. And you're getting into that golden pocket wickage area. The cloud is still thick but starting to curve on you. So it's kind of similar. It's like this kind of like gives a sense of like perhaps where Bitcoin is going in the essence. Like it might make that lower W before going up into that 618 region. Like it's recovering that drop, that Bitcoin drop ahead of Bitcoin. So this was when Bitcoin dropped, I would imagine. So it did that and then it came back up and now it's consolidating. So is this what Bitcoin's going to do? You know, is it already front running what Bitcoin's doing before Bitcoin's going to do it? Coming back into that region. Interesting. All right, so let's just see what anyone has to look at. I'm not going to put out anything for this, but I just think it's beneath the cloud and needs to chill out a little bit because the cloud should be in your favor. But the ultimate, let's turn that on so we can see the stochastic. I was wondering where that went. So you got the 4 hour overbought, 15-minute overbought, hourly push perhaps coming. The hourly cloud's good. You had that kiss off of it. Bounce rejected at the 706. 6.5 region coming up. Potential head and shoulders if it rejects. And then it comes back down to get some stochastic power. And you could do like a pocket here. So it would come down to this region. So this would be, if you're looking for Ajax to get, you know, some sort of another entry zone, then you'd look for some sort of discount region here, perhaps. But yeah, let's see. Could you look at Man USDT, please? Sure. Man USDT. Man, oh man, oh man. One day. The daily. So. Alright. I like the pocket region that it bounced off of here. 706 bounce, and then you're coming back in. You know, in terms of like pattern structure formation, you got like that nice kind of like wedge. We're not technically in the like last 25% of it per se, but you're at the thickness of the cloud is really good, but you're not really kind of going in a manner. The thickness is pretty nice on the cloud here on the daily time frame anyway, and the daily says it's at 41 value, so it's still a-okay. And the 3 days good and the weekly is good, but the 4 hours not in your favor by the looks of it. So let's go to the 4 hour. And the 4 hour is creating a kind of inverted head and shoulders attempt off of this region by consolidation here, expansion, retrace. The CER, consolidation, expansion, retrace, continuation to the upside. That's CER pattern for how to trade consolidation. It expands and then it retraces, and then you look for that expansion again. It's what Trader's Reality symbol is about. You know, he has his little N thing. It's like this, right? And it's what other YouTubers do with their little cup and handle stuff. It's all the same iteration. It's like the Eskimos have 40 words for snow. There's all sorts of ways to look at it. I have my, you know, what's it called? My dragon here. I think the Dragon of Chaos, Yaldabaoth, is pretty cool. So it's the same kind of concept, getting that rounded out price action structure. So you got that kind of head going here. But 4 hours overbought. So you're getting overbought. You had bullish divergence on the money flow and the RSI. You had the RSI kind of play out, came back down on the money flow. Let's look at Momentum Master B, tell you what that with expanding it up. Okay, so what are these crystals? These crystals automatically look back in a back-tested way to find true divergence in a sense, because if you look back too far, it's like a fighter not keeping a tight guard up. They're widening their stance, so they're leaving themselves open to be wrong more often than not. So the tighter your divergence pivot points are, and they remain true divergence, then it's basically like true. And then on a scalping level, it gets even more precise because you're not looking back and guessing about it. It's a tighter guard, it's a tighter stance for the formulas and the math, and so you're getting this true divergence on hidden. The crystal is transparent, so that's hidden bullish divergence on the RSI and the money flow for that, and that's why you had this surge up here and crossover on the MACD. And the Williams is taking off here, but you didn't have the rising sun because it already reached beyond a point value. So that opportunity for the surge of there normally happens when it crosses at a certain value. So that fervor, that golden light of the rising sun, does not hit as hard, perhaps, until it gets to that region. That's just one thing. But you have these positions being established with this. You had previously the bullish divergence on. When you get the double divergence on the money flow and the RSI, that's when you see some nice moves. Whoa, what am I doing? So like here you had that and you saw 44% gains. So are you going to see this because you saw double divergence here? And it's probably already, if you're asking about it, you probably already found a nice point, I hope, at one of these regions in the golden pocket, and then you're just asking for health, whether it will continue or not. But yeah, when it's already in its motion, it's probably in the same sense as Bitcoin, where the 6 hour, the 8 hour, and the 12 hour are all in your favor still. Let's see if that's true. Yes, it is. And so you could be getting this play up to the upside beyond this resistance point. But things to look out for in terms of resistance zones. So you would get possibly rejected over here, possibly rejected obviously from here, and we can remove this now, and then we're gonna just we'll do the trend-based fib just off this little mini thing to make a point of how this works, and see how that 786 coincides with the range high too. And so you'd be looking for you to break that, and then if you can break it above that, then this region comes into play, perhaps. But you know, that being that region being a possible. So if it holds that 236 zone, then you have this type of situation possibly occurring for Man USDT. Man, oh man, that 0.236 needs to hold for this to be true. So it needs to stay above this 236 level at 44691, 0.044691. Yeah, so that's man. And you can be seeing that in like kind of inverted head and shoulders, kind of rounded bottom, cup and handle, whatever you want to call it. Yeah. Ha! You're the man. It's hilarious. All right, guys. Well, go outside, do something fun. That's my story, and I'm sticking to it. Once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable part. Here's another of my interesting toys. It is a double pendulum, kind of fidget spinner thing. I have a lot of science toys, being a science teacher. So anyway, guys, have a good weekend, and I'll catch you on the flip side. Peace.